I'm buying Amazon stock in 2026, and here are the reasons why. Ladies and gentlemen, welcome back to Personally Invested, the channel dedicated to helping you build a life you love living today for the rest of your life. Before we get into today's video, remember this is not financial advice. I'm not a qualified financial advisor, just a stranger, a human on the internet interested in investing. And this video is for educational and entertainment purposes only. Let's get into it. So, in today's video, I'm going to talk about Amazon's business model. I'm going to do a financial analysis of the income statement, balance sheet, cash flow statement, and then I'm going to look at some of the valuation metrics to show you why I think that Amazon is fairly priced today. So, a little bit about my investment mindset and my strategy before getting into today's video. I have an abundance mindset. I believe that there's plenty of opportunities in the market to be found. There's not just one. If someone invests in it, it doesn't mean that you can't invest in it also. And if this opportunity takes off, there are plenty more to be found across different sectors, not just in Mag 7 or tech. 2, I invest for the long term. I plan on holding my stocks for 3, 5, all the way to 10 years into the future. So I can ride out any market crashes, any market booms, any political uncertainties such as the war in Iran and oil prices booming. Listen, in the long term, the stock market goes up, it doesn't go down. 3, I buy great companies for fair or undervalued prices, and I hold for the long term. As long as the business continues to be managed well and performs well. 4, I will only sell if the core business model changes for the worse and the stock becomes greatly overvalued. It runs up, such as Palantir or Tesla, stocks like those. I invest across the board. I look for growth companies, value companies, and dividend companies because there's opportunities to be had across all 3 types of stocks. And they balance your portfolio out to ride through great times in the stock market and not so great times. And 6, I'm aiming to be somewhat diversified, not overly diversified so that my portfolio is basically the market, but I want some sort of diversification so that if one of my stocks goes down, others can perform. If they don't, others can perform and take their place. I've seen it happen to many people and to myself where they've been overexposed in one stock or one sector, and when that part of their portfolio goes down or crashes, a lot of their wealth is tied up in that and suffers as a result. Now, let's get into today's video. So, Amazon. How does Amazon actually make money? Well, it's got 6 main revenue drivers. A lot of them we're familiar with. Starting off with e-commerce. Amazon sells stuff online on Amazon.com. Across the globe to countries all around the world. A lot of the revenue is driven through Amazon e-commerce platform. Number 2, AWS. This is the less well known by consumers, but their B2B side of things, and drives a lot of their net income at the end of the day. A lot of the profitability is driven by AWS. This is basically cloud computing. It just allows businesses to run their businesses or the operations away from their site. So just think about businesses that are able to rent powerful computers, not based on their physical location, but over the internet on Amazon's massive data centers. It's very efficient, cost effective, and scales up and down very quickly for businesses, so they don't have to worry about having to buy software, buy hardware, getting it installed, operating it, maintaining it, upgrading it, etc. It's a very easy solution. That's why so many, like literally hundreds and thousands of businesses, big well-known brands, run their computing out of Amazon's AWS servers. Number 3, Amazon ads. What are those? It's basically Amazon selling ad space on their websites, on their streaming platforms, and anywhere that Amazon has a presence. So Amazon Prime, yeah, you've seen ads on those. That's being sold to other businesses. Amazon.com. Sellers can also pay. Third-party sellers can also pay to have their searches, their products boosted up in the search rankings. Number 4, Amazon Prime, streaming platforms. You pay a fee every single month, and you get to watch a whole roster of shows that everyone's interested in, and you can also pay for next day delivery. That's also something that comes along with Prime, with subscription services. They also have Audible in there as well, I should say. Amazon FBA, this is a massive part of their platform. It offers sellers the ability to have third-party sellers the ability to have their products stored and shipped out of Amazon's warehouses, which allows sellers to scale and grow and reach a much larger audience. Amazon is the #1 e-commerce platform in America and Europe and much of the world, not in Asia. That still goes up to the likes of Alibaba. And then last but not least, physical stores. These are just very small actually, and I think Amazon's actually scaling these down. Just, brick and mortar, typical. Now, where does money actually come from? So Amazon splits their revenues and incomes in 3 segments: North America, International, and AWS. Now, when it comes to revenue, North America makes up the majority of that, and that's driven by Amazon's e-commerce platform. That brings in the bulk of their revenue, over 60%. International is the other part, and then AWS is the other part. So revenue-wise, not that big. However, when it comes to profitability, net income, what's left after all of the EBIT, after all the operating and gross costs are taken out of Amazon's revenue, 60% of that is AWS. So you can see that AWS is a massive profit driver for Amazon, and this continues to increase year on year on year. And with the scale and growth of AI, you can see how Amazon is going to grow their bottom line, their earnings, at a very fast clip as a result. AWS, massive data centers, AI needs those, and the GPUs and the processing powers in order to run these large language models. Now, who runs Amazon? You might think it was Jeff Bezos. It was. But in recent years, that's now been handed over to Andy Jassy. He ran and grew the AWS business. Jeff Bezos has now stepped up to chairman, and now he's looking at more strategic ventures like Blue Origin, trying to get into space and get to the moon, basically. Bezos is on to bigger and better things. Amazon, as in the core e-commerce business, AWS business, was just a stepping stone. Andy Jassy, he's grown and scaled AWS to where it is today, and he's proven that he can deliver value and success at scale. Now, let's take a look at the financials. The key costs for Amazon, when you look at them, are technology and infrastructure, and then fulfillment costs. Now, when we look at technology and infrastructure, that's basically the massive investment into AWS, the compute, the storage, the networking, and AI, all of the background costs that go into that. So think about power, the energy that costs to run these massive data centers, the water for cooling, and then the depreciation of these, like the investments. So when they amortize, when they spread over that cost of the investment that they've made into the data centers over the multiple years, that ends up going into eating into their net sales. Now, fulfillment, this, on the other hand, is the e-commerce side of things. You can think about the massive warehouses. You can think about the fueling costs that they have to run their massive trucks, their planes. You can think about the energy that they're spending. They're spending money. They're spending on energy to run these warehouses, and the robotics, the staff, the wages, all of that. That goes into fulfillment operations. Now, when you take a look at the balance sheet later on in this video, over $324 billion, I should have said, is spent on property, plant, and equipment. A massive overhead to run and maintain the current scale of Amazon operations globally. As a breakdown, 35% of the total cost is tied up in technology and infrastructure and fulfillment. That's over 80% of the overhead costs. And as for the direct costs from sales, that's 55%. So the assets that Amazon have are massive, and they take up a huge chunk of their profitability. So that's something to consider. So who are Amazon's target customers? Well, Amazon runs both a B2B business and a B2C business. They target everyone, but on the B2B side, it's basically your millennials and Gen Zs and anyone who comes afterwards, right? Anyone sub 44 is basically spends half their paycheck on Amazon Prime delivery. As for the AI and cloud business, that's a B2B model. Every business across the globe, there's no one who doesn't basically fit the bill for AWS, at least after a certain scale. They don't segregate across sectors. Anyone from software, finance, banking, media, entertainment, likes of Netflix, government, they all have contracts with Amazon to run their computing out of AWS. And when it comes to advertising, who does Amazon target their advertising business to? Well, they target it to third-party sellers on Amazon Prime. They also target it to big name household brands, agency and media buyers who want to leverage Amazon's streaming platforms to reach consumers. Subscription models, they're targeted to consumers, the everyday households. You got Prime, you got Prime Video, you got Amazon Music, you got Kindle, you got other small brands that Amazon also owns but doesn't necessarily push too much. And as for the physical stores, yeah, that's targeted to consumers. Now let's look at the competition. This is interesting. This is something to note. In the e-commerce and retail space, Amazon dominates, right? That market is growing between 9 to 15% compound annual growth rate between now and 2030, depending on the sources that you look at. And Amazon has a ginormous market share when it comes to e-commerce. 40% of e-commerce runs through Amazon. But when it comes to retail, like physical stores, that drops down 26 to 9%. So there is market share to be won. However, I doubt that's something that Amazon really wants to invest in when they've got AWS growing at such a massive scale. And they're the market leader in that. Basically 30% market share Amazon has when it comes to cloud computing. That's massive. That's almost monopoly status. I say monopoly status, I mean, yeah, literally quick. Depending on who you ask, anyway 30 plus becomes basically a monopoly. Now, the cloud computing market is growing around 22%, depending on what you look at. And that's driven by obviously the growth of AI, right? That's subject to basically reach around basically $2 trillion by 2030. And with Amazon at the forefront of that market, they're primed to capture a much larger market share. And on top of that, see their bottom line and profitability explode as a result. When we look at the advertising market, this is such an amazing space for Amazon because, one, they have a platform that's primed to be targeted to consumers. When you look at consumers and research, it shows that consumers are more fond of the ads that come on Amazon versus other platforms because the ads are actually relevant. Right? Amazon is promoting things that they're going to buy on Amazon Prime. And if you look at how ads have been integrated inside their ads platforms, you can now actually buy you can actually shop through Amazon Prime, which is crazy to think about because it's basically Black Mirror happening before our eyes. Also, take a look at subscriptions. Amazon has 22% market share, a sizable chunk. Obviously, the rest is sort of split up between Netflix and Disney Plus and Hulu and the rest of these. But I feel like as this continues to become a more mature market, I wouldn't be surprised to seeing the strongest players in this market consolidating the positions, and then going back to a more like TV style model where you got a few players to choose from, or fewer players to choose from. This market continues to grow between 6 to 10%. However, the real opportunity, as you can see, is in the AWS and advertising space. Because advertising, they haven't really got much to do there. It's quite a low cost model. It's basically straight profitability. What are the risks to consider when investing in Amazon? Well, they face intense competition. You can imagine that when it comes to e-commerce, Amazon is competing with obviously all of the other individual brands that have shopping websites that you can shop from. But then also in the physical space, they have the likes of Walmart, Target, TJ Maxx or TK Maxx, depending on who you're asking. And Amazon has to compete with prices, with products, and service quality for all of these different brands that have a digital and physical presence. And when it comes to AWS, although Amazon is the market leader, it still faces strong competition from Google and Microsoft with GCP, Google Cloud Platform, and also Azure, Microsoft's counterpart. Now, although these are the big three when it comes to hyperscalers, you can imagine that as a business, if you've already invested significant portion of your capital into one of these hyperscalers, you're probably going to stick with them because the hassle to be able to transition from one to the other, your internal business data, processes, and then even the knowledge skill set to be able to do so, it's a massive jump. And so winning these large contracts is essential, and once you've won them and keeping them is essential, right? So the competition there is also fierce, and it's continuing to increase with the likes of the AI. As that increases and takes more mainstream, you want to have the likes of AI model creators using your data centers to run their models. And the more entrenched they become in your ecosystem, the harder it is for them to move. Amazon also has regulatory and legal challenges to consider. Because Amazon, operates at such a global scale, they have to consider the individual laws and lay of the land across different countries, and they have to make sure that they're adhering to them. And if they don't, they can face massive fines. Another thing to consider is Amazon's massive capex expenditure and low free cash flow. Because you can imagine, to run a business at this scale globally, there are significant capex investments that need to be spent in order to maintain the business the way it is, and in order to allow it to grow. Like for Amazon Prime for Amazon to continue to expand its Prime and AWS operations, they're going to have to invest billions, hundreds of billions of dollars to build new data centers, build new fulfillment centers, hire new staff, train them, spend all this money on running the infrastructure. So as shareholders, you're going to basically have to be okay with free cash flow being volatile throughout the coming years, and that's nothing new for Amazon shareholders in the past. Amazon's business model is also subject to economic sensitivity. So you can imagine that Amazon sells a lot of discretionary goods, also some essential goods, but discretionary goods on their e-commerce platform. Now, imagine what would happen if the economy went through a global recession, right? Consumers don't have as much discretionary income, they're not shopping as much on Amazon, and therefore Amazon's revenue suffer as a result. What if oil prices increase? And a lot of the products that Amazon gets are from China. You can imagine oil price increases, shipping costs increase, that cost is then passed on to the end consumer, and as a result, what happens? Less demand, less discretionary income, and Amazon's revenues are hit as a result. Think about energy costs. If those rise as well, the cost to run their data centers, their fulfillment centers, to run their fleet, those costs all increase. And this doesn't happen in just one location, it happens globally. So that affects Amazon's profitability. And then again, geopolitical and trade risk. We've literally just seen Trump throw around literally 25%, 100% tariffs across the globe. Now, for Amazon as an importer, that directly impacts them, because now they have to import goods at a higher cost. They're going to absorb some of that, obviously, to stay competitive, but a lot of that's going to get passed on to the end consumer. And again, that also impacts the affordability of the products and the demand of them. And then again, discretionary income, blah, 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 leading to impacted revenues or lower revenues. So trade wars and impacts on the supply chain are things to consider when it comes to investing in Amazon. Now, what are Amazon's growth plans? What are the real growth drivers? Well, the e-commerce platform continues to grow slowly. It's not a massive growth driver. However, it's a massive revenue cash cow, right? If everyone's spending the money on Amazon, they don't have that same cash to spend it elsewhere. It's not like music or media, where obviously your attention is limited, but you have a lot more of it to give to different businesses. The real growth driver there will be around efficiency, using automation and robotics to reduce the massive costs involved in running the fulfillment centers and getting things delivered. So think about drones, think about robots scurrying around the fulfillment centers to pack and ship items, and reducing the workforce needed to run and deliver packages. Now, they've invested $4 billion into this area of the business to improve that. when it comes to AI and cloud, now this is the real growth driver. Amazon is investing $125 billion in AI infrastructure. This is ridiculous. And also, the company is planning on doubling its power capacity by 2027 to handle these new AI workloads. On top of that, they're also working on developing their own in-house AI chips, like the Trainium 3 chip. And this is going to help them have a competitive edge in order to run these massive AI models within their data centers. And then they're looking at strategic partnerships with OpenAI and other AI model creators. Amazon's doing this to position themselves strategically as a leader in the infrastructure and delivery of AI models, which makes them a much more sticky player for in the marketplace. When you think about as a business, who do I go to when I want to either run my AI models, or who has a marketplace of AI models to pick from? Advertising, as that continues to grow, it's a high profit margin, like I've said. Amazon already has the platforms. They just need advertisers to come and give them the money to run the ads on the platform. And lastly, subscriptions. Just get more people on Amazon Prime. Get more people use cross-pollination, cross-selling them across Prime Video, Prime Music, and then just regular shopping on Prime. Now, what is Amazon's competitive moat? What makes them so strong as a business globally? Well, they have very strong network effects. Think about it. Once a consumer gets into Amazon, they're not just going to shop. They get to see all of the other products and services that Amazon offers. And the cost to even become an Amazon Prime member is so low. Literally, you can get a free trial, and then for a couple of dollars or pounds, you're in there. And it's such a low cost for such a great service. People don't even think about cancelling their subscriptions. They just keep it on and keep using it, right? As a customer, you get access to basically the world's biggest shop, right? There's so many products, there's so many sellers, everyone's competing for the lowest prices that you're basically guaranteed to get a deal at the end of the day. And for sellers, there's a massive, because loads of customers are coming, more sellers are attracted to the platform because it's a massive marketplace that sellers don't have to work on building themselves by running paid ads. And for developers, there's a massive large ecosystem that Amazon has for applications to be built. You have SaaS that you can get from Amazon. You can get PaaS, like platform as a service, so tools for you to be able to actually build your own applications, and SaaS as the developers. And you have you have the raw infrastructures that developers can have access to, the raw cloud computing, to build their own platforms and SaaS and customize to their heart's desires, right? Amazon also has economies of scale and cost leadership because they operate at such a massive scale that with their suppliers, they're able to bargain and get the best possible prices for whatever goods or services they're looking to procure. Amazon's brand is absolutely ridiculous. I don't think there's anywhere in the globe that hasn't heard of Amazon at this point. And it has such a great brand because they offer such a great service across the board. And when it comes to the cost of switching, yeah, I mean, who's going to give up their Prime membership, right? Who's going to give up their next day delivery, right? For literally like $5, you get next day delivery on basically most things, and you can get same day delivery for even like a smaller fee. Like, is that not ridiculous? And when it comes to AWS, again, if you as a business are entrenched and ingrained in AWS, the ecosystem, you've got your business data, you've got your business processes built on the back of AWS, literally the mental and physical effort of switching to a different cloud hyperscaler is immense, and therefore it makes Amazon's business model very sticky. Now, let's look at financial analysis. Let's take a look at Amazon's income statement. What do we want to see when we look at the income statement? We want to see it up and to the right. We want to see it growing year on year. Amazon's been able to grow their income by about 13% over the last 12 months, from 2024 to 2025, right? These figures are a bit outdated, but I believe on Yahoo Finance they've been able to generate around just over $700 billion of revenue. $1 billion of revenue. And what does that look like in terms of bottom line? Well, Amazon has about 10% gross margin, net income. Obviously, a lot of that is eaten by the cost of sales, so the actual products that they procure and they sell. But then also the massive overheads to run and maintain their infrastructure for their AWS sites, cloud data centers, and then their fulfillment centers for the e-commerce store. So for the e-commerce site. Well, what is amazing is that regardless of all these massive costs, net income has been growing at a 20% clip. That's ridiculous. The average S&P 500 company is barely able to even grow their revenues at like 10%. Like, that's ridiculous. And Amazon, as a global company and the scale and monster that is already, continues to be able to grow revenues at 13% and net income at 20%. That's ridiculous. Trying to find that in the market is like trying to find a needle in a haystack. When we look at their balance sheet, what do you want to see? We want to see a strong balance sheet. We want to see a cash-heavy and debt-light company. And that's exactly what Amazon is. They've got over $78 billion in cash and no short-term debt. So what does that mean? It means that if a recession is to happen, if a downturn in the economy is to happen, and Amazon needs to rely on, and Amazon isn't able to generate as much sales, they're fine. They don't have any debtors to pay. They don't have to worry about laying off as many employees that other companies might have to. They have cash reserves to ride them out through those short-term hurts. And that's what you want to see as an investor. You don't want to see your company forced to make terrible business decisions, selling off parts of the business, laying off key strategic individuals who are high cost in order to weather the storm of a downturn in the market. And that's what having a strong balance sheet allows a company to do. What about the cash flow statement? Now, this is a tricky one for Amazon. Now, there's two parts of this that you need to consider: the operating cash flow and the free cash flow. What's the difference? So the operating cash flow is the cash that's generated from key business activities. So trading, buying goods, selling them, and whatever's left at the end of that, that is the operating cash flow. As for free cash flow, this occurs after you've taken out the capex expenditures. Now, as I said, Amazon is a very asset-heavy organization and has to pay for these. And for them to grow, they need to continue to invest their cash into their business. Now, as investors, free cash flow has been growing, however, it fluctuates because at times Amazon needs to invest a lot of money in order to continue to grow. As we've seen, they've invested over $124 billion in AI data centers because they've seen because of the opportunity in AI. However, when it comes to the operating cash flow, this continues to increase, which shows that their business is healthy and growing each and every single year. Now, as for the valuation, is Amazon priced fairly, expensive, or overvalued? Well, when I run my projections and I run my valuation analysis, Amazon is currently, the share price is currently at $210 per share, with a forward PE of 26.45. Now, what does that even mean? Compared to the average Shiller PE ratio of the stock market, which is sitting at 38, Amazon is undervalued compared to that. And in its history, this is one of the lowest PEs multiples that Amazon has had. Amazon was always traded at a premium because it's been a massive growth company in the tech industry. And when I run my projections based on the growth rates that I've been able to find from Yahoo Finance for both income and for both revenue and net income, we see that analysts have Amazon growing around 12.5% this year and 11.5% next year for the next years to come. So I've plugged that into model. As for net income growth, because of that massive expense in Amazon AI, net income growth has been downgraded for 2026 down to 7.6%. However, in the subsequent years, they're expected to see net income growth accelerate back to over 20% for the next few years. And that's off the back of this strong investment in data center and seeing that grow and that highly profitable business. Now, what does that mean? It means that we can see Amazon grow from over $700 billion in revenue in 2025 all the way to over $1 trillion in 2030. right? Hitting that by my calculations in 2028. I also see net income margins improving off of the back of that, reducing costs, increasing the scaling up the AWS business model. And how does that flow down into P? Well, I end up seeing EPS grow to $7.79, and then all the way to $16 by 2030. Now, for a company like Amazon who's growing at these sorts of growth rates, anywhere from a 35 to a 40p, I think is fair. Analysts currently have them at a 36p, so I don't think I'm far off of those with my estimates. When we plug those growth rates in, see the share price increases from $210 now to $270 by the end of this year on the low end, and $311 on the high end. And what does that mean for a compound annual growth rate? Well, that's a 30% CAGR just this year alone on the low end, and almost a 50% CAGR on the high end. Now, when you run those projections all the way 5 years out, all the way from 3 to 5 years out, that leaves us at a share price of $570. That's more than double where it is today in 5 years. Try finding those sorts of growth rates elsewhere in the stock S&P 500. It's not easy. Now, running that down, that leaves us with a CAGR of 20%, over 20% over the next 5 years. 22%. That's more than double the average S&P 500 return over the last 50 years, which sits at 10%, making Amazon very attractive. Even at these prices, it's actually such a steal. And if it drops any further, I'm looking to increase my position in Amazon. I see Amazon so to me, Amazon is a massive opportunity to buy, a very stable, strong growth company over the next 5-10 years plus. It's a company that you buy and hold for the rest of your life. Think of the likes of Apple, think of the likes of Meta, think of the likes of McDonald's. All of these very strong growth companies that continue to improve their products and services year on year on year. And because they're so ingrained in consumers' day-to-day life, for them to go out of business, something literally world-ending has to happen. So for me, Amazon's a buy at $210. It's a buy at $220. In fact, I started buying the company at $227. So as it continues to drop, I'm going to continue to increase my position in Amazon. Now, that brings me to the end of this video. Let me know if you found this analysis into Amazon interesting, and if you'd like to see more content like this where I break down the stocks that I'm personally invested in. With that being said, ladies and gentlemen, have a great rest of the day. Share this video with anyone that you think would find benefit out of this. Subscribe, like, only if you found value out of this analysis. And with that being said, I'm personally invested. The question is, are you?